Okay. Okay. All right. Well, what we're going to be doing today is we're going to be doing some live analysis. We're going to see what's up in the market. I'm going to show you guys what my members are looking at as well. I'm going to show you some of my recent trades, and we're going to go into what to expect in the upcoming days as well. So I'm going to do a little bit of all of that stuff. So first things first, I generally like to do is I like to get a gauge of where the flow of money is. Okay. So let me go into the currency strength meter. Here we go. First time watched your YouTube videos last night, Joe Urban. Okay. Welcome, Joe. Welcome. It's good to have you on board. Okay. So this is a little strength meter that I use. It's a proprietary strength meter that I've created for the members that are Forex watchers and also Urban Forex. Well, what we basically do is we just try to follow the flow of the money. Because the concept is, the big boys know information that we do not. Now, all we can do is we can't start the flow, but we can join the flow. Okay? So it's like piggyback riding. You see a fast train coming along, you're just jumping on the train. That's all it is. So we're looking at where the world is looking at in terms of putting their money. So if I put my mouse here and I use this meter on my left-hand side, I'm going to see some strength numbers. So let's do that. I see Aussie as a +6, right? Now, if Aussie is a 6, it's out of 6. The number's out of 6. So that means the Aussie group is extremely powerful. Let me open up the Aussie group. Boom, boom, boom. There we go. Okay. And in the Aussie group, I'm going to be going up to the daily, just to let you guys know why Aussie is showing up as powerful on our end. Of course, I'm going to briefly show you. I'm not going to go into the exact science of how I do it, but briefly showing you, it's like, okay, we can see Aussie USD. This chart is going upwards, showing Aussie strength. Aussie CAD charts going upwards, showing strength. This is Aussie Yen, overall upward, showing strength. Euro Aussie charts going downward, showing strength because Aussie is on the right side, not the left side. Pound Aussie, again, pound is on the right side. This chart's on this way down, showing strength. And finally, Aussie dollar. Actually, this one is not showing so much strength. And this one is not showing so much strength. This is showing weakness. This is going down as well. Okay, so this chart obviously is not a chart we want to be trading. What we're going to do is make this gray. Okay, so this is out of question. We don't want to even mess with this. Okay? All right. In fact, I'll do it like that. Voila. Okay, now we're down to 5 pairs that we like. Okay? Even pound Aussie we don't like so much. Okay? So in these 5 pairs, we need to find out some trades. So if we want to trade today, what we have to do is we generally go into the 4 hours, 1 hour, once we figure out the flow of the market, saying where's the money flowing in the industry. Hi, Adam. Sorry, I just saw you come in. So where are we seeing where the money is flowing in the industry? So all we're seeing right now is the Australian dollar. Everyone seems to be buying it, right? Yeah, everyone seems to be buying it now. These are banks, hedge funds, corporations, you name it. They're all buying Aussie dollar. Okay, so now that we know this information, it's not just a chart going up, it's the underlying flow across the world. This is happening. Okay? So we want to be doing something with Aussie because our chances will increase as long as we're going with the Aussie strength. So let's take a look at what some of my members are working on. So this is January 25th. This is yesterday's trade, Aussie USD for a sell. Let's take a look at this one, why this one is in a sell. So here is his stock. He did Aussie USD primarily for a sell. I think he's trying to do a sell before a buy. Let me take a look at this. This is Aussie USD. Here we go. That's a 60-minute sell. I think he's doing a 60-minute sell prior to a buy. Let's take a look at that. Okay. I believe he was looking at it in this area here. So what he's basically doing is he's looking at the overall flows up, but we can't buy up here. We can't buy up here. Does everyone understand why that's not allowed to buy up there? Okay, if I keep these circles the way where it is and I go to the 4 hours or daily, notice how high in the trend those buys would be. Yeah, it's too late. These are chasers. When the market moves suddenly and then everyone jumps in, you know, these are chasers. So for us, when we have to control our risk, we're like, okay, we want to go upwards as well. Give me a better price and I'll get in. So we study all the situations, and Armo's looking at this. Armo, the guy who posted it, he's looking at this as, well, I see a range developing. Now, if there's a range developing, he wants prices from the bottom of the range. Yeah, he wants to do buys from the bottom of the range. Now, to do buys from the bottom of the range, prices were here yesterday, and he saw that. As he saw that, he's like, this is an opportunity, and he goes for the sell. Okay, it says this is the sell prior to the buy. Okay, so he goes for the sell. Here's the design of it. Okay, that's the stock. I ended up taking Euro Aussie for a buy as Aussie didn't really pull back. Okay. Secondary entry. Okay, here we go. That's the entry I've been watching right here. The one I drew for you guys. Where the line was right here at 7,300. Followed by a markets going up, up, up. Rollover. He enters here. The gray portion is the stop loss. Green portion is the take profit. And then I think he takes out a position out of this one. Okay, this is the after effects. So we like to do this quite a bit. We do prior to the trade what we're thinking. We do during the trade what's happening, and then we do after the fact what is happening. And then on top of that, it's even our members follow up on us, and they all get into the conversation and they join. We have live analysis and all that stuff with it. So what we're basically looking at is Aussie momentum coming in. Now there was a temporary sell for the Aussie before we prepare for our buys. Now let's look into the buys now. So what's up with the buys? Okay, let's see here. Okay. Okay, we've got a range there and a range there. Okay, at what point should we buy? Should we buy right now? Should we buy here? Should we buy here or here? Okay, we know we have to buy. All right, Aussie is strong across the board. We know we have to buy, and the risk is decreasing as the price comes down a little bit for us to buy, because we're not buying all the way up there with all the Tom, Dick, and Harrys who's super greedy. They just want to jump in, right? So we're not trading with the with the newbies. We're trading a little bit more professionally. But when it comes to when do we get in, that's a whole different question, isn't it? So what's the telltale signs of what's a safe spot to get in? Okay, so let's look at some of the things. A couple things is there's something about this price, isn't it? Which is causing the range. There's something about this price that every time price comes to this area, the seller freaks out and the market starts to go up, or the buyer kicks back in, whichever way you want to look at it. Every time prices come here, that's once, that's twice, that's 3 times. So could it happen again? It's possible. It's possible. But what if it goes lower? Are we going to be safe to sustain that? Now, what we're gonna do now is we're gonna go down to the 1 hour, and we're gonna look at the previous circles that I drew. And I want you to watch how the turn happens. Okay? Always focus on how the turn happens. Don't focus on, should I buy it here? I'm gonna buy it the moment it touches the purple line. No, don't do that. That's super basic. That's for children. Okay. Let's go to the 1 hour. And let's take a look at this on the circled areas and be very, very focused on this area. Now, does everyone see this arrow that I'm drawing right now? Yes? Okay. Now, this arrow is where the seller momentum has begun. Okay? So focus on the selling momentum. The sellers come in, they halt a bit, and then the sellers come in again. Now, do they get more aggressive or slow? Okay. So if this is the first, okay, let me clean all this up for you so you guys can see it much easier. Okay. Okay. So if this is the first movement down, followed by a small pullback and then the next movement down, and if I move these out and I say, okay, that's the first movement, that's the second movement. Okay. Would you say the second movement is smaller than the first one? No. Now here's a question I want to ask you. Here's a very important question I want to ask you. When the markets are moving down from here, again, I'm going to draw the arrow. When the markets are moving down from there, think very carefully. Can we say this is support equals resistance? Can we say this support? I don't know if how many of you guys were in my webinar on Tuesday, but is that support equals resistance, the little line that I drew? It's a trick question. It's a trick question. Okay. Now the answer to this is no. That's not support equals resistance. Think of it this way. If I draw this little green candle right here on the first movement, like that, how much percentage pullback is that compared to the guy who moved it all the way down? How much percentage pullback is that? Five percent, 6%, 7%, maybe? Yeah, 5% pullback, right? Now, even in the 5% pullback, do you notice there's no wicks on top, but in fact tails? That's a sign. That's a sign that that seller, it's himself who stopped. There is no buyer pushing it. That's not true support equals resistance. Hence, this whole thing is one chunk. That's one single move. That's not a stop in the market. It's nothing. It's not doing anything to the big flow. Does that make sense? Okay, now that we say we understand that concept and we say, okay, well, it's moving down at full capacity. If it's moving down at full capacity, I'm going to clean this up a little bit so you can see. So this is one single piece here, and then we got another one here. Well, how about this one? Isn't that also a 5% pullback? Right? If I draw it again here, it's like, well, it looks like that. 5, 6, 7% pullback. With this time some wicks on top, and it's spent a couple candles there, which means he halted there for a bit. But then immediately after, he crashed lower. He made a lower low, correct? Everyone with me so far? Yeah? Once he made a lower low, immediately after the lower low, what happens? It's as if that lower low didn't exist. He went straight back up. This is the purest sign of support equals resistance, telling you that this price is so hot that even the seller says, screw this, I'm going back. Okay? I'm trying to give it a human perspective. There is, financial terminology all around it, but I'm trying to give you a human perspective of it, saying this guy keeps pushing, but then there's something about this area that scares him and says, okay, enough, I'm not going any further. It's like a person walking into the haunted house. He's going in full capacity, and then finally he sees that ghost word that scares him. He's like, you know what? Enough. Okay, that's true support equals resistance. Okay, following that, it does a pullback where a buy is supposed to begin. Okay, so that's the first area. Okay, that's the first circle. The second circle, it starts from here. It's starting to come down again. What's the flow of this one? Okay, we realize that, okay, no higher high, no higher high. When the buyers came back in, no higher high. They went higher, but they faked it. They came right back down. Okay, so no higher high. It's not natural. Then they come back down. Sellers coming down, halt a little bit, coming down again, halt quite a bit, coming down again. Oh, no lower low. Halt quite a bit again, coming down again for a test, in. Okay, now you're starting to notice, wait a minute, no lower low here, no lower low here, and no higher highs here. You're starting to get a feel of, we're working with the range here. Now we need to time ourselves to precise our entry. Okay, same thing here, the next circle, here we go. Sellers start to come in. Very deep sellers, they pull back a bit, then they come down, they barely make a lower low. When I say barely, look at the candle that came down the first time, 2 candles. But the next set, when this comes down, 5 candles, and it can't even do half of what the first thing did. That's a sign of a slowdown. But immediately after that, it spikes right back up as if that low never happened. This price is critical. This price is critical. That's the price our seller is scared of. And that's the price we prepare our buys from. Everyone with me so far? Okay. So now the same concept is happening again. If we know we have to buy, we have to watch the momentum fade here. We can't blindly hit a buy from the green, from the purple line. Watch the flow come in to die. So far, the flow's coming in here hot. Coming into here, pulls back around 30-40%. Goes down again, makes a lower low, but starts to come back up here. It's like, oh, 50, 60, 70% pullback again. And if it stays up there, it'll look like that's no lower low either. Okay? Now, it has to stay up there. But if it doesn't stay up there and if the next candle starts coming down, then we have to wait a little bit longer. But if the candle is showing signs that he doesn't want to go down anymore, then we're going to use the knowledge of, for the longest time, there is no lower low. Knowledge number one. Okay, we're in a range. There is no lower low, and they are showing signs of a slowdown. Okay, information number 2. Aussie is strong across the world. So we want to be buyers. So that's on our side as well. Knowledge number 3. Okay, which is now that the sellers are slowing down and dying out, we're getting close to the bottom of the range where we also have support from the previous buyers who keep coming back to life when prices get around this area. When you put all these 3 things together, you time the market in such a way where you're able to execute the trade without any problem. Now, you know where the main problem comes, guys? Is places like this. Here's where the main problem comes. I'm going to put a line right there where we used to have it before, a line right there. The problem comes is when people are watching the momentum fade like this, they're like, okay, let's watch it. They come down, reach down to this lower low. They pull back a little bit, and they come down again. And they're like, oh, okay, he's down near the purple area. And then a big green candles comes to here. They're like, oh, my God, it's not a sell anymore. They'll hit the buy up here because they're just so much in shock. They're like, it's not pulling back. It's not pulling back. When am I going to get an entry? We're back near the top again. I think it's going to go. They start making up all these stories, and there's no patience for the test. That's where a majority of people do the failure, is the inability to sit on your hands. All right, does that make sense? I used to be very aggressive like that. Or like, oh my God, it's leaving. It's leaving. I had the right analysis. The buy was working, but I wasn't in it, so I used to chase it. And when I chased it, well, horrible death. Right? Don't run after that ghost in a haunted house. Just wait for it. Plan it right. Make sense? So you guys see it's a very, very emotional concept. Okay, it's a very, very emotional concept. So you want to be one step ahead of how your brain is going to activate your emotions. Okay, so far so good. So we still got some time to see what happens to the Aussie USD? If it does eventually close up here and it keeps going green, then green, then green, so be it. Give me a test back down and I'll think about buying from somewhere here or here and put my stop losses down here. Okay, and then I'll try to take it back up to here, saying that maybe my buy cannot go higher than this. But since Aussie is strong across the board, I'm going to go check all the Aussie and see, has anyone already crossed the highs? If yes, then I have a higher chance that this will also cross the high. Does that make sense? Are you concerned with the last swing that didn't make a higher high? No. Because I can ask the same question as, am I concerned that the last low didn't make a lower low either? So who should be scared, the sellers or buyers? Here's the thing, no one knows. But there is one additional factor that's missing. It's the underlying power that no one actually cares to research. Aussie is strong across the board. We use that to reduce our risk of being wrong. That's why we say, okay, we're going to keep trying the buy side. We're going to keep trying the buy side. We're going to stay away from the sell side because it's a little bit more risky. But, you know, my students are a little bit more advanced and they're counter trend traders and this and that. Like, they're doing all sorts of stuff. So is everything make sense on how I see the Aussie coming up soon? Okay. Good. Okay, let's take a look at another example. I'm gonna show you a trade that I did in this similar concept. Okay, let's see, where's my recent trades here. Give it a second. You go to the main page. Okay, article. Building trading instincts. USD buy close. I had an Aussie USD for a buy on January 20th. This is 6 days ago as well. Okay, so this particular buy, do you notice where this buy is? Does this look anything familiar to you guys? Notice where this buy is. It's the birth of the first time the range was developing. You guys see it? Remember this little area we crossed out? Let me show you here. Let me take that same chart and I'm going to go up to the 4 hours. Okay, here we go. That's where my trade occurred, right there. That was the first indication of a range is developing. I hit the buy from right over there. Okay, followed by second buy, I missed. You know, there's some sells in there. I don't do sells. Counter trend is for some of my aggressive students because once they know the story, you can make money on both sides. But I generally like to go with the flow. It reduces my risk of being wrong. Okay, so I missed the next buy, but I'm watching out for the next buy here. So that's something I'm actually keeping an eye out for. So that's going to be another interesting buy coming up. Once ever the market starts to slow down, we'll get it. Okay, so I took that buy. I always post updates. Made only $280 out of this. It wasn't so much. Took a small risk on it. So, and it went straight up into the area and I closed it earlier. Now notice my take profit was all the way up at this green spot. However, I closed my trade here because I started to notice that pattern of no higher high, no higher high, no higher high, no higher high, no higher high. And then I was like, well, Aussie is strong. He can blast upwards. That's a common concern anyone can think like, oh, well, Aussie is strong. He can just shoot right through. But look at the momentum, how it's going up. Would you say this is a strong buyer? After I saw the struggle all the way up, slowly, struggling, finally seeing no higher highs as well, it's like, I think this is going to have a very difficult time making higher highs. That's when I start to get the hints of, wait, we're approaching a range directory. So I did my trade as a buy, exited it, announced it, a range is coming up. And as the range is coming up, some of the traders took it for a sell. and then I'm looking for a buy again. Does that make sense, Sandy and Joe? You guys seeing the concept of okay, so Sandy's question is, would buy still valid? Is the buy still valid until the price breaks below circa 74.60? 70. Yes. Oh, 74.60. Okay, breaks below here. No. Let's take a look at it. Let's take a look at it. Okay. What I generally like to do, let me go to the daily and I'm going to show you. Okay, you guys gonna help me answer these questions, okay? Sorry, 4 hours. Let me clean this up. Let me show you. Okay. What if I was to do this? I'm gonna see if I can make this dark for you guys. Okay, what if I was to do this? Okay, everyone see the black part of my, come on. Okay, everyone see the black part of my screen? Okay. Now notice the recent movement that we see is a break in support equals resistance, right? Like that's official, it goes higher, correct? Once it goes higher, let's mark the highest spot that we see. That's the highest spot. Okay? If that's the highest spot, I'm going to move it candle by candle. Now, if this is the recent movement up, we're going to call this buyer zone. This is buyer zone, and this is the guy who begins this entire party. Okay? So this is the buyer zone. This is the guy who begins this entire party. Okay? Your 74.60 dude. And as I move the chart forward, the highest point gets breached here for the very first time, correct? So we're like, oh, a new support equals resistance. So technically, I'm supposed to move my line up to here. It's like, oh, that's a new one. But then when I look further, it's like, oh, that's a fake. That's not really a new one. Oh, okay, back. Moving forward, forward. Oh, a new one. Oh, it's not a new one. Faker. Okay. New one. Nothing. Nothing so far. So we're like, well, if there's nothing so far, what can we do? What's the recent part of the market that you know about? Is simply this. It's all under this buyer's territory. Consider him like the toll, the mafia toll. Saying this is his territory. Anything above here is all in buy zone. Doesn't matter how red the candles look. It's all buy zone. Now, if the price can reach up to 74.60, okay? If the price can reach up to 74.60, I want you to think of it this way. Okay? Now, Sandy, that was your question, right? 74.60? Now, think of it this way, okay? What if I do this for you? I'm going to do this and this. Now, I want you to take a step back from the screen and just have a bird's eye view. Okay, a bird's eye view. Why don't we say, okay, well, I can see a movement there. I can see a movement there. And then, would you say that's a higher high sequence? The big movement? Excuse me. Ooh, sorry. Okay, we see higher high sequences, right? Now, the next one, thank you. The next one goes up again as a higher high, but notice this movement. Here's the first move. Here's the next move. Here's the third move. Okay? Now, if the third move comes back down, back to the 60 mark right there, the chart's going to look like this. So then wouldn't we say the same thing like, oh my God, there is no higher high? Isn't that what we would do? If we do that, and there is no higher high, if it gets up to that price, if Aussie is still strong across the board, I would still buy it. However, if Aussie is losing momentum across the board, that is the first sign of the market taking a big turn. Confused yet? Okay, let me miniature size it for you. Let me miniature size it for you. And then I'm going to give you a hack on how to do this faster. Okay? Here's a miniature version. Take a look at this way. The market goes up. Okay? Swing up, swings down, the next swing up. Okay? Let's say that looks like a higher high, right? The next swing down, he doesn't come back down all the way. He comes back 60%, let's say. The next swing up, he barely makes a higher high. Okay? Now if I look at this like, wow, he's trying. But then as the swings keep coming down, and look at how low this swing came back down. Isn't that pretty low? It almost looks like wherever he started, he came back to. So that means this high is not real. That means the highs are not really happening. These are signs that markets are having trouble up in that zone, which means prices need to pull back. Does that make sense? So if I was to do this entire concept over here, the ones I was saying like this, and then like this, and then if this is the high, but then it comes back down to the 60 mark that you're saying, it'll look like this high, this entire high never happened. It'll be fake. Now, why is it going to be fake? Let me show you by going to the weekly, because that's how the big boys see it. And that's why I call it a major turn in the market. Okay? Sorry, daily. Let's do daily. Okay. Now take a look at this. Take a look at this. Now, on this chart, doesn't it look very easy to draw my lines? Like, oh, well, that's a high, pull back. That's a high, pull back. That's a high, and then pull back. And any high that's happening now that collapses, like, wait a minute, I don't see any new highs. It's not there. What's going on? You see that? So these are signs that the upflow is slowing down. And it's a sign of that same guy in the haunted house. It's like, wait a minute. He was running full speed all the way to the top. Why? Well, what is it about this price that keeps him knocking him back down? What is it about that price that scares him? So you use that underlying trend to always give you that understanding of, well, what's he doing? What's he trying to show me? Okay, does that make sense? I know it's going to sound a little bit complicated, but if you practice it a little bit, or you watch this recording again and again and you apply it to real life trading, you'll start to see the flow. You know what these extra flows actually are? You guys want to know why these extra things happen? Why am I cutting off the heads and stuff like that? Here's the things. I'm going to show you. Now, one of you guys asked me earlier is, am I not concerned about it didn't make a higher high previously, right? That's the best part. When the market tries to go up each time, if it starts to make a range, right? If it starts to make a range, any sudden poke out that goes beyond where it's normally supposed to go, which is the red line, what happens is breakout traders and impulsive traders jump in on the buy. Now, if you are going to be the seller, okay, let's say you're a store owner and you want to sell something, what do you need? Buyers or sellers? You need buyers. So what's the best way to activate buyers? Emotionally get them involved in trading. So jump up the market a little bit, get them all buying and slam it right back down, getting everyone stuck. Everyone's like, oh my God, I'm so screwed. I'm screwed big time. Same thing happens on the bottom side. You want to be a buyer, but to be a buyer, you need sellers. If you're buying, I'm buying, Joe's buying, Sandy's buying, everyone's just buying, well, who are we going to make money from? Bank's not going to print extra money for us. We got to make money from somebody. So the way to get the whole world lined up in the wrong direction is a sudden impulsive change in direction. Because at any point of the market, everyone is buying or selling. But if you want to get them all in the same direction in one single shot, do something drastic. Release something in the news, get them going in one direction. What's going to happen is these things happen. Base, like that. And then a sudden drop happens, the whole world turns sellers. What's important is what happens afterwards. Are we going to get a turn back around? If yes, that means this price, all this low is fake. It never happened. Hence, these prices become very hot. But it's not visible to the naked eye, because to the naked eye, all they see is it's a downtrend. Keep selling, keep selling, keep selling. Interesting, isn't it? So when you think of it in this concept, you cannot buy with other buyers. For you to buy, you need sellers. It's so simple, but people don't follow that concept. When the market jumps up, like this is a range here. When the market jumps up to here, everyone joins the buy at that price. Everyone joins the buy because like, oh my God, it's going, it's going. Well, wait a minute. Who buys real estate like that? You know, real estate went up to all-time high. It's now a house that was $300,000 is now worth $5 million. You're gonna go and buy the house at $5 million now in hopes that it's gonna become $10 million? It doesn't work like that. You always need a better price. You always need a better price. Otherwise, you're in too late, right? Just like you guys were saying earlier in the markets or in the session. Yeah, it's too late to buy up there. Okay, so more important than trading technically is if you trade technically with the concept of how does the market actually work. If I keep studying strategy after strategy after strategy, I'm always going to lose because strategies only can hold up if the story plays out the right way. That's why strategies have a hit and win, hit and miss kind of thing, right? Sometimes they work perfectly, sometimes they don't work at all, and you're like, well, what do I do? So what happens when it doesn't work? People keep adding filters and filters and filters and filters. Let me add in this moving average. Let me add in this little price action technique. Let me add in this thing, and I will know for sure. I will know for sure. No, you got to understand how people buy and sell. Once you understand that concept, you're good to go. Okay. From what price would you stop buying? The moment I see prices coming down into this area, below your 60 mark that you're saying. Below the 60 mark, if prices start to hold in that area, then I would actually stop buying. In fact, even if prices get down to here, and when I say I will still buy at the 60, and Joe, don't worry, even I was guilty of that. I used to do that all the time. So it's better to be part of it at first, so you can be better when you're out of it. Don't worry. So it's better to do it like that. So when I say I would buy it here at 60, if it does come down to there, I would not buy it and take it back up to this area here. I would buy it and take it up to this spot here because that high was a faker. There's a high chance prices are going to struggle in this area. If the big boy is scared of that price, so should we be. Okay, that's like the big bird picture. Just like I was cutting off the head over here of that little circle, all I'm doing is I'm cutting off this entire top part. And if I want to see it more clean, I can just go hit the daily button, and then it's like, okay, I can see it a little bit more easier. Okay, so if I just chop off this top part like that, if the market comes down, then I just go into the daily because it's easier to see it there. It consolidates more of the flow. All right. Okay. If it comes back down to the 60 area, like, oh, okay, that whole top is just faker. It's just not going up. All right, guys. So we discussed quite a bit of stuff today. The one thing I'm gonna give you guys today is that Aussie trade. I'm gonna give you guys that Aussie trade. It's an interesting trade. I got my eyes on it. All my students got their eyes on it. However, it's not a bulletproof trade. We still have to watch it if some sudden things change. Okay, that's how trading is, unfortunately. If things change, we have to adjust. Can't be strict with the market. You have to be like water. You have to adjust to it. So, but for now, things are looking crystal clear for a buy. As of now, the buys are looking very, very nice to me. So here we go. So far, it's still going down. That area is not holding. It's going down. Or it's not the price that the seller is scared of. They're starting to go down again. Okay, so let the seller die out. Once he dies out, we'll get a game plan. Cool. And I'm gonna see you guys next month anyway. So if you guys are here again, remind me about this trade. Remind me on January 26th we did the Aussie USD buy, and we'll go over it. We'll cover it. I don't mind doing that again with you guys, and then we'll see how we did. I'll see if I have a trade. I'll show you my statements as well. I always show live statements of my trades, so it'll be fun. It'll be fun. So thank you guys so much for attending. It's always been a pleasure to have you guys here. Thank you, FX Street, for having me. Until next month, next time, guys. Cheers. Bye for now.